liabilities, and owner's equity. About 9 weeks ago, I would have thought you were speaking an entirely different language. However, after several practice problems and many efforts of trial and error, I began to slowly but surely understand the language of accounting and one important aspect, the balance sheet. Now, some of you may know the balance sheet as just a fundamental tool of accounting. However, the hospitality format is just a little different. A hospitality industry's balance sheet deals with the many assets, liabilities, and owner's equities that each department of the hospitality establishment encounters on a daily basis. It has 3 important fundamentals. First, it always adheres to the fundamental equation of accounting. Assets equals liabilities plus owner's equity. Second, since there are many departments that make up a hospitality establishment, they have to be very flexible so they can format to fit the needs of everyone. And finally, it must meet a certain time requirement, usually taken at the end of the hospitality accounting period. Now let's first start off with what exactly is a balance sheet. According to the Hospitality Industry Financial Accounting 3rd edition by Raymond S. Smidgel and James N. Demetrio, a balance sheet is a statement of financial position for a hospitality establishment at a certain point in time regarding the account balances of assets, liabilities, and owner's equity. So in other terms, let's just look at the word balance sheet. Has balance in it. Balance, the value of one item equals the value of another item, and thus the items are said to be in balance. In accounting, we call this the fundamental equation of accounting. This is always true no matter what, and that is assets equals liabilities plus owner's equity. Now, what exactly does this mean, an asset, a liability, and an owner's equity? Well, an asset is defined by Smidgel and Demetrio as resources used by the business. In other words, it's anything owned by the business that has a monetary value. Examples are going to be accounts receivable, inventories, expenses, prepaid insurance, and most importantly, cash. Liabilities are a little different in that the liabilities are the claims to these assets by the business entity, usually an outside business entity. Examples of this are going to be accounts payable, notes payable, and advance deposits. Finally, you'll have owner's equity. Owner's equity is the financial interest of the owners of the business. This is going to be capital and stock, revenues, and withdrawals. Now, it's really important to know that there is a difference between assets and liabilities. For example, suppose you're out shopping one day with money by a loan from your parents, and you buy a pair of shoes. This pair of shoes is going to be your assets, and the terms of when you pay your parents back and how much is going to be the liability. A further emphasis on this importance is shown in a financial self-help book by Robert T. Kiyosaki and Sharon L. Lecter, Rich Dad, Poor Dad. In this, the author explains to his children before he dies that, there's a really important thing in the financial world, even if you're only 10 years old, knowing the difference between an asset and a liability. The author goes as following. Rule 1, you must know the difference between an asset and a liability and buy assets. If you want to be rich, this is all you need to know. It is the number 1 rule. It is the only rule. Pretty much what the author is saying is it's very important to know this difference at a young age. Otherwise, you're going to have many financial struggles throughout your future. The second part of the balance sheet that's very important is that it has to be flexible because there's so many departments in a hospitality establishment. It takes a lot of people and a lot of departments to just make one guest happy. For example, some of the departments are human resources, accounting, food and beverage, and room revenue, just to name a few. Each department is responsible for making their own balance sheet, and it must be balanced. Assets equals liability plus owner's equity. And after every department has a compiled balance sheet, they make a final hotel one that looks at the entire establishment's financial situation as a whole. Again, assets must always equal liabilities plus owner's equity. You can apply this as when you're a guest of a hotel. Suppose you go to check out and you get your final bill. It's going to show a breakdown of all your transactions. Suppose you had $15 to food and beverage. That could be for breakfast. Or $45 to housekeeping and rooms for the minibar fee. Or you may even see $450 for your room rate charged to room division. Again, you'll see that every transaction is going to be equal to the final bill, and thus your own bill is in balance. A final part of the balance sheet, but still very important, is that it has to cover a specific period of time. It's usually taken at the end of hospitality period. In hospitality, the period is usually 1 month. So at the last day of the month, we're going to do this. Why do we do it at the last day of the month? Well, it's pretty simple. So we go every new month with a fresh slate. Suppose at the end of the month, we see that assets does not equal liability plus owner's equity. So we have an error. So we have to go back and look at it to make sure we're not in debt or in excess. Otherwise, it's going to spiral into a snowball effect and eventually get worse and worse as month goes to month. Now let's take an example of a balance sheet. Suppose we have an owner and he invests $6,000 of his own cash into the business. Since cash is an asset, we're going to see a $6,000 increase into assets. And since it's his own money, we're going to see $6,000 into capital, which goes under owner's equity. So it should just simply look like this as the balance sheet with one transaction. So based on the fundamental equation of accounting, that assets equals liability plus owner's equity should be 6,000 equals 6,000, and thus this transaction is recorded correctly on the balance sheet. The language of accounting may be a little and it will always be taken at the last day of the period. The balance is extremely important for hospitality as well as accounting businesses, and it's actually even important for your own life as well.